Hey there, Brad Castor from GreatOptionTradingStrategies.com. In life, as we all know, there are deeper relationships and there are more casual relationships. I may be on great terms with my doctor, my hairstylist, work colleagues, my local bartender, but that doesn't mean I'm going to go on a weekend fishing trip with any of them or confide in them highly personal details from my life. Now, when it comes to the stock market, airline stocks fall into that more casual relationship category. They're definitely not ideal long-term investments or commitment material, but at the same time, they can be incredible short-term trading vehicles. In fact, airlines are one of my favorite categories of stocks to sell puts on for current high-yield income. And why is that? Well, in this video, I'm going to share the 4 reasons why I love selling puts on airline stocks. I actually got the idea for this video last weekend when I was putting together the 2025 mid-year update on our official trades inside my private membership site, the Leverage Investing Club. Now, I may have jumped the gun by a few weeks, but I was excited and energized because we actually closed 4 winning trades last week, which is a record in the club's 13-year history. Fingers crossed, but we're also in good shape to exit a couple more winning trades over the next week or two. And these were both in repair mode for a while, but both should still produce double-digit annualized returns over their extended holding periods. In fact, we've had a higher number than usual of put selling and covered call trades that have needed to be repaired in the last, say, 6 to 12 months. It's been a tough market for value-oriented stocks, and inside the club, our approach focuses on selling puts on profitable stocks that are attractively valued or better when they have good technical setups. Now, this is not a sales pitch for the Leverage Investing Club because it's actually pretty hard to get into the club as I only offer it to readers of my daily option tips and insights newsletter. I'll pin a link in the comments below if you're interested in getting a free subscription to the newsletter, or you can download any of the free books, reports, or guides from the Great Option Trading Strategies website's downloadable library and get a free subscription to the Daily Tips newsletter that way. Whether you're selling options for income, leveraging longer-term returns via leaps, or building either a value investing or dividend growth portfolio, I can show you how to use options to make more money in the stock market quicker and safer. Best of all, I don't spam, sell your information, promote third-party services, or any of that. Once per calendar year, maybe twice, but usually not, I may invite you to join the Leverage Investing Club for a one-time fee, quickly recoupable, but 99% of the time with the Daily Tips newsletter, I'm basically just teaching and sharing what works in the market and what doesn't, and literally just trying to help you become a better trader and investor. Okay, back to airline stocks and why I find them to be such terrific income generators for put sellers and covered call writers. As I said, I got the idea for this video after reviewing our 2025 closed trades year to date, 2 of which were very easy trades earlier in the year on Delta Airlines. The first one we entered on March 17th and sold $43 puts for the April 4th expiration date. That was a weekly cycle just ahead of earnings, and we didn't want any exposure to the earnings release scheduled for the following week. After we entered the trade, the stock bounced higher for us, and we were able to exit the trade ahead of schedule and lock in 78.92% annualized returns on real cash secured capital over 7 days. Yes, the shorter holding period skewed the annualized returns, but we were still able to lock in more than 80% of our max potential gains in less than 40% of the original expected holding period. That turned out to be a very good move because the stock shortly thereafter took quite a tumble and actually closed at $37.25 a share on that April 4th expiration date. Yikes. Quick side note, in my last video on when to exit a winning put selling trade, I explained the 2 key factors I use and teach others to use for knowing when it's time to lock in gains on a winning put selling trade. And this first trade here on Delta was a textbook example. Now, I'm not saying that I knew the stock was going to sell off like that, but at the same time, the exit was based on sound trade management principles that I've gained a great deal of respect for as they've kept me out of trouble countless times, including this time. I'll go ahead and put a link to that video at the end of this one if you want to check it out. As I say in that video, get your trade exits right and you're definitely going to improve your results. Okay, we did a second trade on Delta a short time later, but after the earnings release. In fact, that earnings release was what stabilized the stock and shot it higher. With the stock back above the $40 share price level, we sold $35 puts this time, or where the stock had found support. expiring the following week. This was a Thursday, and then the following Tuesday, with Delta up some more, we bought back the puts on the cheap ahead of expiration and locked in those 109.98% annualized gains. Again, short durations can definitely skew the annualized numbers, but this was still a very good trade. And it was a bit of a special situation as it was set up to be a short duration trade. Our usual sweet spot for selling puts is roughly in the 3-week to 45-day time frame. In fact, this is basically what I call a big mover trade, where a stock makes a big move and you simply bet Mr. Market that he can't fully reverse that move within a very short time period. I have a full video that covers the strategy and why it's the closest thing to free money that I've found in the market. And I'll add a link to that video at the end of this video as well. There's also a comprehensive PDF report on the big mover strategy available on the Great Option Trading Strategies downloadable library page. Again, that link is in the description below. Okay, so let's look at the advantages of put selling on airline stocks. Now, those advantages for option sellers have a common denominator, and it all stems from why airline stocks make such terrible long-term investments to begin with. And there are many reasons why they do make such terrible investments. They have high operating costs. They typically carry a lot of debt. They're highly sensitive to disruptions in the economy and vulnerable to energy price shocks. It's also a very competitive industry, and it just takes one competitor who decides to increase capacity or go after market share, and then everyone's profits tank. Now, the industry has been more disciplined in recent years and has been more consistently profitable, but when an airline turns unprofitable, the ensuing losses can be staggering. The bottom line is that while an airline can be nicely profitable for an extended period, investors know that it's just a matter of time before something goes wrong and the industry may once again begin hemorrhaging billions of dollars. And that has some serious implications for income-oriented option sellers, as in seriously good implications. The first thing it means is that premium levels for airline stock options are almost always going to be very plump and juicy, and that means attractive payouts. Remember our 2 trades on Delta? The one where the annualized ROI was skewed by the abbreviated holding period? Well, that first one was originally set up to be an 18-day trade, or about 2.5 weeks, or a little shy of our typical 3-week to 45-day duration target. And the original projected returns, if held until expiration and the position expired worthless, was still 37.51% annualized over those 18 days. Not too shabby. In fact, our target for new put selling and covered call for income trades inside the Leveraged Investing Club is 15 to 25% annualized. Hitting those numbers or better when we have an airline stock setup we like is rarely a problem. So that's advantage number 1, nice, attractive payouts. But above average premium levels mean more than just great high yield income. It also means the trades are easier to manage and repair if necessary. Here's a fun fact. Inside the Leveraged Investing Club, when it comes to official club trades, we have never lost money selling puts or bear call spreads on an airline stock. But it wasn't because I've always been right about where an airline stock is going to trade next or not trade next. It's because options of airline stocks have higher implied volatility levels. And when you're working with options that have above average IV pricing, you're going to get better terms on your rolls and adjustments. This is a point I've made inside the club many times. Unless you're adding capital to a trade, which we do, but only on rare, very specific, and highly advantageous occasions, it's the ability to sell more time value that makes trade repair possible in the first place. In fact, trade repair is one of the 2 reasons why I love selling options as much as I do. The bottom line is that I sell options because it's a fantastic source of safe, high-yield income, and I know that I can pretty much fix any trade that goes against me. And by fix, I don't mean break even. I mean still make money, just not as much money as if everything had gone according to plan. Or as we say around the club, heads we win, tails Mr. Market loses. Seriously, not putting anyone down, but if you're selling options and booking more than, say, 1 or 2 losses a year, you and I should have a talk, because that's not the way option selling is supposed to work, at least in my view. Even 1 or 2 losses a year may be 1 or 2 too many. Okay, sorry, this video is not about trade repair. It's about why airline stocks make good option selling candidates. So far we have nice payouts when you're right, and nice premium levels when you're wrong, which makes trade repair much easier. Now, the third reason why I love selling puts on airline stocks is also connected to trade repair. And this also goes back to why airline stocks make such terrible long-term investments. Range-bound is probably not the most accurate description, but if you think about it, as long as an airline is profitable, its stock isn't going to trade down to zero. There's going to be a floor. But at the same time, and this is the beauty of selling puts on airline stocks, these stocks are never going to trade to the moon. There's a limit to how high they can go. They're not sexy, they're not growth stocks, they're not meme stocks, they're never going to be truly loved and embraced. It's almost like they're a necessary evil. They zig here and zag there, which is one reason why they almost always have robust implied volatility pricing. But at the end of the day, they're kind of on a chain. In most economic environments, there's a limit to how high or how low an airline stock can trade. And when you combine that with our robust option pricing, that's an option seller's dream. Okay, the fourth and final reason why I find airline stocks to be such great put selling for high yield income candidates is that on a nuts and bolts level, they're pretty option trader friendly. You can usually find airline stocks somewhere in the $30 to $80 share price range, which means they're accessible to just about anybody regardless of account size. You're also typically going to see the options priced in either very friendly $1 increments or at the very worst, still reasonable $2.50 increments. And finally, there's plenty of volume and liquidity, which means tighter bid-ask spreads, aka efficient pricing. Okay, to quickly summarize, airline stocks can be very attractive put selling for income trading candidates for 4 reasons. First, they almost always have nice, attractive option pricing, which means the payouts are very good. Second, the elevated implied volatility levels also make trade repairs when one of these trades moves against you much easier. Third, airline stocks tend to zig and zag a lot, but at the end of the day, they really don't go anywhere. Wherever they're trading, it's probably at a level that they traded in the past. And that too makes trade repair easier as it's less likely that the underlying share price is going to move too far away from you. And fourth, the options on airline stocks tend to be trader friendly in terms of volume, liquidity, share price, efficient pricing, strike price increments, etc. Okay, if you enjoyed this and want more, be sure to check out the channel's other videos. I recently took about a 7-year hiatus from YouTube, but I'm back now and adding 5 to 10 new videos a month. Also, sign up for the Daily Tips newsletter via the pinned comment below. Options are seriously like having a superpower, and I can show you how I develop mine, and I can help you develop yours. Heads we win, tails Mr. Market loses. That means you should be coming out ahead on virtually all of your trades. Okay, until next time.